Good morning, everybody. I'm here to go over mortgage protection and some sales ideas, strategies, and techniques, but I'm going to put some focus onto I want to start with leads, of course, but then I want to put some focus onto the Forrester Smart UL and how I use this ROP section to accumulate cash value over time with a 4% interest and no cap at this point anyway. And there's a 3% guarantee on that, along with showing you how to present this in the home so you can do a few things. You have a few strategies at hand to buy time, pay off the home, or pay off the back end of the home. So we'll go over those things. But first, I do want to start with the leads. And there's a lot of benefits that you guys don't know about with this also. So, you know what? I got to get rid of this little thing here. Okay, now I can see myself. So it all starts with this. This resource is how I'm getting into 15, 20 homes a week and being able to present this style of product. And this product has worked, I don't know, for me, it's one of the best ones for me because I'm able to present value. I can bring value to the table, and I can present the opportunities of, like I said, buying time, paying off the back end of the home, or paying off the house at a great premium rate. So the premiums are incredible. So once you have an understanding of this Smart UL and how to use this, it might be your go-to product. I'm not sure, but you know, with me, the lead resources are number one. We have to have them, and not enough of you are taking advantage of this resource. The demographics involved in this to get larger premium sales. So I wanted to start with getting your lead order up. Starting at 10 is great. Going to 20 is better. If you can consistently do that on a weekly basis, guys, you will be at those numbers that I host every week on online and Voxer and things like that. So put your lead orders in and do it on a consistent basis. Make sure that those come in every week. Don't lie to yourself getting into this industry and thinking that you can run this business without those marketing resources, because you can't. You own your own company from a basic strategy point. And you must market the hell out of the company. So let's get through this here. Let me go into this here. So we have Forrester's. It's a simple app strategy for this Smart UL. You can call Forrester's at any time, right in front of the client, to get through this your first couple rounds. So my assistance to this, to my reps, is not to really have them contact me, but in the first couple rounds of them learning this product in this app is to call the carrier itself to get this application and done properly. And however they want to get it in, usually by fax is best, or whatever strategy you use to get this in. The Smart UL does have cash value built up. So what do we want to do? We're there for mortgage protection, right? So we got this house, we got these two clients here, Mr. and Mrs. Jones, that want coverage 9 times out of 10 on Mrs. Jones to have the money, protecting Mr. Jones from Mr. Jones's death, protecting Mrs. Jones from his financial loss. So we have numbers. Numbers are important to work from, and they're usually financial numbers. Something has to equal them either protecting this equity in this home from the loss of this home at the sale of the home, which means buying them time. So buying them time is a huge selling point for a lot of you, and myself included. So what is buying time? Buying time means that they have enough money to finance this program or this home or anything that they have to do to keep the equity in the home from the bank stealing it back in some sense. So we don't want anybody to lose their home. So buying time is the least inexpensive way to go about this and put some premium on the board. So that's an option. And I'm going to show you how I do that too. On a piece of paper, when I'm inside the home, I come in and I say, hey, Mr. and Mrs. Jones, you know, my name's Jason. I'm here to give you options on how to protect your mortgage from the loss of that mortgage or the equity in the home to the banks. And I will tell them that 7 of 10 homes today are being lost back to banks due to what? Due to the significant other passing away or both parents passing away, and the children not having enough money to keep the mortgage payments going until the sell date. This is important facts because this is just an option for them. Now, my question would go to Mrs. Jones. So out of the two of you, I want to know, who has the higher of the two incomes, because that person's probably safe. I want to work with the person who has the least of the two incomes, and it's usually Mrs. Jones. So Mrs. Jones, one of the questions I will ask is, would you even stay here if Mr. Jones was no longer here? If he was dead and gone, would you live in this town? God forbid that happened, but would you stay in this house? And if the answer is yes, I know that my job in most demographics that people run, if you're dealing with a $25,000 to $50,000 household income, you may want to just buy them time. And this will put numbers on the board for you all day long. This is a great strategy because, Mrs. Jones, here's what you don't need to pay off the whole house. You just need enough time to sell the home. You know right now, which you're not going to live in this home. Is that correct? No, I'm going to sell it. Okay, so is there equity already in the home? I ask equity because I want them to see what they're protecting. I want them to have a visual on the protection that they need and why they have it. So I want to know this. I want to know, do they have life insurance existingly? For simplicity reasons, I'm going to keep one without life insurance and then one with. For the more advanced style of sales, a good way to get a lot of sales is by replacing policies. If you can get into replacing policies, you will make a ton of money in this industry, but you have to know what you're doing when you do that. You got to do it right. So if somebody has no policies and they have no money and then just walk in and they have no life insurance, no pensions, no 401ks, and they're just based on, Social Security income, or maybe it's a job, maybe it's for a younger crowd and they're just working at this point. We want a style of product that will not only help them buy time, but will pay off the home too at the end, or it will help with retirement. So I've got three angles that I shoot for, guys. I got retirement, using the cash value. So at the end, when they pay off the home in 30 years, if you take a 40-year-old and they're 70 years of age, and they've been pumping 100, 200 bucks a month in here for 30 years, and it's earning good interest. Remember, the interest rate is about 4% on this. Sorry. The interest rate's about 4%, but it has no cap. So the one I have is about 5.85% on the cash value. However, doesn't matter because we're living benefits with this product too. So we want to include those into the value. So we want retirement. We want cash value at the end of this thing. We want cash to help pay off the back end of the home. So let me straighten this up. I'm right on a curve here, so this thing's kind of wobbly. So we want cash value to pay off the back end of the home. That means that there's about $10,000, maybe $20,000, maybe $30,000 left on this house, and they can use this cash to pay off that and end the policy if that's what they wanted for. Or they can decide to pay off the home and keep the policy till death. Now, what I'm doing is I'm bringing options to the table, is all I do. This is the way I do it, though. It's not every time I do it this way, but in a lot of cases, what I want to do is I want to bring options, I want to bring value, but I want it to flow steadily. So for you, one of the simplest things to protect is the equity and paying off the home. If you protect those two things, this is a sell day. If you just remember these two things, you'll be okay. Equity is what builds up in the home over years. So you're building a number up. It's like a savings account with interest usually, because the housing market usually goes up, and this is a great investment. So we always want to protect that from the bank. The bank will steal this back, what, in 3 months? No mortgage payments for 3 months. That's the bank's house now. So for the women, usually who have less of an income, and the kids, bring in the kids too and show more value that way. So if both of you were to go too, who would inherit the house? That's a question I ask. If both of you were to die, God forbid, tomorrow, who would inherit the equity in the house? Now, my kids. Well, they don't own it. So do you understand how it works? They'd have to buy out what's left on the house. So would your kids even live here, or would they just sell the house? 9 times out of 10, the kids would sell the house. So we have protected the equity, okay? So we want to protect them from the sell date. Protecting the house in general is the larger numbers. So you have, let's say it's a $200,000 home. There's 30 years on this. So you got a $200,000 home with 30 years to go. You want them to be safe from 1 through 30 years. So anywhere down the line here that this can pay off this $200,000 house. And that's where you get the big numbers out of it. So you want to inform them about the product. Now comes in the product. You've built rapport to the point of trust between you. Now you have to become the expert. They like you as a person, but rapport to the point of trust when it comes to their money is a whole different game. They want to know where the hell this money's going and why I'm going to invest into this product over time. And why would you choose this product? Why is it the best option? Well, there's a lot of reasons. One is because of the finances involved. The Smart UL from Forster's, the premium is light, and you get a very high face amount. You usually get a very high face amount for a little bit of money. Okay, that's one. Two, you're building cash value, which I'm going to show you in a second. I got some paperwork on it. Number three, you have cash value building up at an interest rate that is about 4.1% or something like that right now. And the bottom end is 3, but the top end, there isn't one. So there's no cap in it. Now, this is based on Forrester's earnings. This isn't linked to an outside benchmark. This is linked to Forrester's interest earnings. So you want more information on this, you're going to have to contact them and get the information from them so they can discuss it with you and advise you on the fluctuations in the cash value. Number 4, we have living benefits. So this brings what? Value. And the 5th one, which I can say the 5th, is that it never dies out on them. Compared to the term products with the ROP, this will never die on them, and usually it's lighter on the wallet than most term products. Depends on the age and the individual and the product, but 9 times out of 10, this is building cash value at an interest rate. It gets a lot of people in with a lot of, I don't say you have to be fairly healthy with this, but you don't have to be the healthiest human being on the earth. You have to get through a few apps to understand that, or contact Foresters and make them let you understand the standards of the underwriting for this product. Get to know this product very well because you're bringing low premium rates, you got a high face amount, you got great cash value earnings, no limit to what it can do, and then you have the living benefits. Some of those living benefits are this. So if you can't do 2 of 6 daily activities a day, a portion of that face amount can become yours. If you had cancer, heart attack, or stroke, portion of this face amount becomes yours. And then you have things like grants and scholarships, competitive scholarships, emergency assistance programs. They do community programs. They have 1% of this face amount will go to any charity of their choice too, which is pretty cool for people that are charitable. So if they know that 1% of, let's say $200,000 is going out, what is that, $2,000? $2,000 goes to their favorite charity. That's a great option for them to have and know that they're not only, their death means a lot to their family for the house, but it also has helped their favorite charity, and it doesn't come out of their money, it comes out of the Foresters' money. So that's a great option too to have for people that are charitable. And we have these living benefits which bring value. And I'm telling you right now, I outsell everybody in my neighborhood because of that word there, value. I use this product to bring value. I want individuals to know, imagine this, is that Mr. and Mrs. Jones pass away. They have 2 children, okay? Now the guardians, the grandparents take the kids in. Now the kids are what, 14 years of age, you got one that's 13. This will mean that they have until 18 years, they got 4 years and they got 5 years here, right? So for that 5 and 4 years, they will get $900 per head per child on a monthly basis. So $900 to help protect this family is huge per head. That helps big time for the guardians of the children of the parents that passed away. So again, more value. So I'm going to go into the return of premium portion of this too. The return of premium part of this puzzle is huge too. Remembering that they are building a cash equity not only in their home, but for their retirement too. Now this does two things. One, it can help for the retirement, but remember, there's a second option too, that later on in the years, as they build a lot of cash value in here, this can also help pay the back end of the house off, whatever's left on the home. Boom, house is paid off, they don't need to pay premiums anymore, and maybe they have another policy in place. Make sure they have another policy in place if that's an option. And I inform them, maybe you're in business 20 years from now, and tell them, before you do this, let's replace it with another policy, and that builds you as the expert on what to do. And it just makes you look good, guys. And you have to bring value to the table at all times, but you have to bring your genius to the table at all times too. You have to be creative in sales. Being creative in sales is what I make my most money on and outperform everybody else, helping protect the home, protect the back end of the home, protect the house at any time from 1 to 30 years or 1 to 15 years if you double up on the payments, things like that. So at this point, if they don't want the policy anymore, they can also cash it in. What does this act like? Let's say that this ROP situation has them dumping in, well, let me take a look at something here. I have literally a cash value sheet here. So we have 1216.53 a year going in. What's that, like $100 a month for $125,000. And the interest rate is 5.3% on this situation. So down the line, we go 20 some years, and there's about 30 grand in here. That's paying $1,200 a month. There's $30,000 in there in 20 years. So depending on what's owed on the house, what down payment they put on, this 30 grand could pay off the back end of the house, or they pay the house off, let's go 30 years, and there's about $50,000 in here. I tell them what most of my clients will do at the end of this road is they will take this 50 grand and they will annuitize it. They will turn it into a retirement schedule for the rest of their life. So they will use that money to tack in another $100, $250, $500, $1,000 a month until it ends, and they will annuitize it. They can annuitize it through this company too by pulling monthly withdrawals out of this, just like an annuity. But if they cash it out at that time and put it into a higher interest earning annuity, it'll probably perform better and get them better results for a longer period of time. So in this situation, this person started at age 52, at age, let's say death, 85, there's like $60,000 in here or so, and they were earning 5.3% on average to 3% interest on average to do this. So this is a great value to bring to the table. Like I said, it's a simple app to run. And for those of you that are interested in getting into the index universal life market, this is where it all started for me. So it really started in this market here with Foresters to help me better understand the index universal life market. So I used this universal for many, many years to help people get their cash values back, put a big face amount on the table, and then do a couple things to help pay the house off. Remember, there's scholarships too for the children, so they take 250. They have to be like a 3.5 student in grade point average or something like that to even qualify. It's a high grade point average, but they will give scholarships out on an annual basis if they qualify for them. But they have something like a written essay. Call Foresters about the details of these things. They have a written essay the child has to do and things like that. But it's an awesome way to build value with them. So let me go through something else here. So we have this, we have that. We have account values, we got age, we got definitions, we got loans from this thing. They also can take loans from it too. We don't advise that, of course. This isn't the highest interest earning product out there. This is a value because we want a large face amount for all our customers, right? If you stop thinking about your wallet and start thinking about their wallet and what's going to happen to them and provide them with the best product for that decision is what you should be doing. So what you should do at all times. Face amount is a big deal. What do we want face amount for? Well, we want it to help pay off the home. If God forbid somebody passes away, we want this house paid off. We want a lower premium rate for a larger face amount. That's what everybody's looking for. And this does the job very well. So compared to most products, if you put $100 towards this a month, and somebody's 40 years of age and in a final expense product, they're able to get $40,000. This will get them like $150,000 or $100,000, something like that. So there's a big difference between this, and for those of you using final expense, you could use this all day long. Now, it does not pay out as fast as final expense does, like if you use a mutual loan, they usually pay out 3 to 5 days. It takes a minute to get all the records through, especially for veterans, but it is a great solution. It usually pays out in a week or two. It's not a real big deal, but if you keep them flowing and keep your lien order coming in, this brings a lot of value to the table, the Forrester Smart UL. So inside the house, it's important to understand how to get this stuff on the table. You know, selling all these annuities and all these UL products or index universal life products is making me a lot of money, but how do I do it? I want to know, you know, what they have. I do go through what they have. So what they have is important to my sales. Do they have life insurance? This is a big deal, guys. If somebody has life insurance, I replaced last night for $1,000. I replaced the Phoenix 20-year term for a plan right, Forrester's plan right, for only $20,000. That product was worth $200,000 to her husband, but it only had 5 years left on it. She knew that she was going to outlive this 9 times out of 10. She was tired of dumping money into something that didn't earn interest. So I got her $20,000, but she already had other life insurance products in place, so she was also safe there. So we did this because she wanted the $20,000 to guarantee that that would be there. Long story short, my pay was $1,000 on that deal. What I did was replace the product because she felt like she was going to outlive it, and it was her decision. Of course, I could just put the options there. So get used to using the word options. Mr. and Mrs. Jones, I am here providing information to give you options to do a few things. We want to help pay off this home if, God forbid, Mr. Jones passes away. We want to, if he does not pass away, we want a product that also earns interest on your money when you're paying on it, and then at the end of the puzzle allows you to cash in for another retirement schedule. And they love that. Along with the fact that, God forbid, that Mr. Jones passes away and he were to get cancer, heart attack, or stroke, that money becomes his while he's alive too, helping both you. So the bottom line is these products that I present pay one of you or both you together. Somehow, some way you're getting paid. Here's a flip side to my sales process too, is that you have Mr. Jones over here, you have Mrs. Jones over here, and the face amount of $100,000 is on Mr. Jones. If he dies, she receives that, right? What happens if Mrs. Jones passes away? So it's 20 years down, as you've seen in the cash value bucket, in 30 years, there's like 50 grand in it. So in 30 years or 20 years, there's like $30,000, 35,000. So if, God forbid, Mrs. Jones passed away in 20 years and she's 50 now and she's 70 at this point, 80, I give paint a picture of being that age. So I'm literally showing them the age. If you're 70 here and 80 here, Mr. Jones, you'll receive 50 grand. So in some case, it's like having a policy on both you paying one premium. So the other thing I want to present to them is their budget. I want to make sure that they understand what they can afford. A lot of you sell products and it may come off the books and you may get a phone call because they can't afford it. A lot of you be like, I just can't afford it. And that's where you miss this piece of the puzzle to make sure it fits into their lifestyle and not changing their lifestyle too much. I mean, some of them might have to make sacrifices that you find. Maybe they drink too much, smoke too much, eat out too much, just buy frivolously, and they can actually afford larger premiums. So I start to jot down like the main 3 numbers that most people have at the end of the month left over after they pay their bills. So we got 500, 750, and 1,000. Which of these 3 numbers, Mr. and Mrs. Jones, are you usually closest to after you've paid all your bills off? So are you 500 and below, or are you $1,000 and above? Well, we have an average of about $1,000 a month left. And I say, just for curiosity and just for your future, for Mrs. Jones's future, I want them to know that everything I say, I care about what their money's doing for somebody's sake. So for both your sakes and for Mrs. Jones's sake, if you pass away, is there money put away? Like, are you saving this in a savings account? Is that what you're doing with this money? And sometimes that's where I find $10,000 or above annuities too. I might find cash in a savings account or something and be able to do that. That's another story. But the $1,000 here is transferred into a fund that's being a savings account and earning like 0% interest or 0.01% interest. So what we want them to do is we want them to take a look at what interest can do to $500 a month. So I want her to have a big policy. I don't want to go too far out because I want to know too, Mrs. Jones, are you going to live in this house? Because in the beginning I told you, all you got to do is have enough money to sell the house. But if you want a great retirement, both of you, this is the way I do it. I personally do it this way. So I'll shovel $500 a month at this product. I'll earn interest on it. I'll build cash value. That way, if Mr. Jones, if Mrs. Jones passes away, there's a stack of money put away for you in the cash value bucket. And if, God forbid, Mr. Jones passes away, Mrs. Jones, you get $300,000 to survive the rest of your life. Let's take a look at this $300,000. If we evaluate your lifestyle and his income, he brings in about $30,000 a year, right? Through his income, Mrs. Jones, is that correct? Yes, he does. Okay, well, take a look at this. This $30,000 would replace his income for like 10 to 20 years. So not only that, but I'd actually show her what an annuity would do and help her understand that later on. But for this sale only, just selling this deal, I would provide her the information on what that $300,000 does. That's only $30,000 basically for like 7 to 8, 9 years. So it's not that much money when you think of it from that point of view. So it's a big hit though if she transfers that towards the house, right? And helps pay off the house too. In most of my sales, so all you know, I am very concerned about how people end up with cash. So that's how I make a lot of the value that I bring to the table is based on cash value earnings and living benefits. I want the individual that's paying on the product while he's alive to understand that he has access to money while he's alive too. Wouldn't you hate paying on something, those of us that had policies, as I do too, that you're paying on a product and it benefits somebody else? We love that. We care about that person, so that's why we do it. But wouldn't it be nice to know that it also does something for me, that all my money's not just going up in smoke if something happens to her? So like I said, 9 times out of 10, your job will be to protect Mrs. Jones. And to know that, you might want to know who of the two has the higher of the two incomes. Mrs. Jones is lower than him. She needs it worse. But this policy also takes care of it. So if he would get cancer, heart attack, stroke, can't do 2 of 6 daily activities a day, that this portion of this puzzle becomes his and hers while he's alive, okay? Or if she passes away and he keeps the policy for the kids in place and he would get cancer, or he wants to keep it in place for the kids, then it's in place for the children too, if God forbid she passes away. Or he could take the money out of the cash value, present her with a nice funeral, and then start an annuity with the cash value. The bottom line is that there's a lot of options that all of you are missing to present to these people. I don't want to confuse it too much, but I do want to bring a few options to the table. So let's just go over a few of their options real quickly. Now, as you know, let's go over option 1. Mrs. Jones, you would not live in this home if Mr. Jones was no longer here. Is that correct? I'm like an attorney. Yes, that's correct. So I put a yes. Okay, so what you were saying is that you would sell the house for the equity in the home, right? Let's say you're paying $1,000 a month. You got 10 years, this place will be worth about $100,000 to you. So, I'm trying to provide them with the information of showing them the money and the value that they're protecting. They're not just walking away with that money. They have to inherit that money first. Not only them or Mrs. Jones, but the children do too. And there's a process to doing that. Remember, you're talking about a dead person in the house. And by the way, in some homes, Mr. Jones and Mrs. Jones don't always have to be on the house together. So I will ask, are both your names on this home? And if he says, no, I'm the only one on this house, I'll say, Mrs. Jones, you have to buy this home from out underneath him. So we have to protect the fact that you have to buy out the back end, whatever's owed on the home, to actually put your name, on this mortgage. or you have to put a down payment to buy out the portion that's left on the puzzle, or you have to sell the home. And since she wants to sell the house, we want to put small numbers in place. And this helps you make a lot of sales, is why I want beginners to do this. If you remember to buy people time in everything that you do, you always want them to have enough money to make a decision. So what is enough money? Well, Forrester starts at $25,000 at Smart UL anyway. So the Smart UL starts at 25 grand. So you have to start there. That's a very low number that's usually affordable for most people, okay? So this Forrester Smart UL usually starts, it does start here. And then it's gaining cash value. It helps buy her time to do what? To sell the home. Sell the house, guys. Why is she selling her home? Because she doesn't want to live there. Now, she doesn't have life insurance on him. He only comes with Social Security. So for her to collect on his Social Security, let's say that here's another valid point that I bring is that Mr. Jones's Social Security is $3,000 a month and hers is $750. The mortgage payment is $1,200 a month. We know that she's on the streets, right? She can't afford to stay here. But she's like, I got his Social Security. I'm okay. No, you're not. That takes 6 to 12 months for you to inherit that 9 times out of 10. Why? Well, because baby boomers are dying by the dozens every day. It's a process. You have to understand you're dealing with the Social Security office. This is all worst case scenario too. I am the worst case scenario man. I have to walk into the house presenting worst case scenario or I will not be doing the job correctly. Everybody you talk to is always on a best case scenario. And you must turn their minds around to say, look, that's great and everything. And I hope it turns out that way. I can only wish the best for you two. But insurance is used for worst case scenarios, not best case. That's why people are not losing their homes who work with me. And people that don't work with me lose the home or the equity. So we must protect the equity in the home, Mr. Jones, so you can sell it and walk away with $100K, $200K, and there's your retirement. For people that even want to stay in the home, like last night I'm with a woman who's like, they'll have to throw me on the streets. That's exactly what they'll do. Luckily, her husband was backing me up saying, hon, they're going to throw you out on the streets in 3 months. We got to do this. And that helps a lot when you get the significant other involved and making sure that if he's a nice guy and he's there to help his wife, it helps his sale go down big time. So you have to get both parties involved and both believing in it. So write your stuff down, write it down. I write a book every time. This is everything I've done in front of you has been a sheet of paper that I'll do in front of Mr. and Mrs. Jones because I visually want them to see what the hell they're doing with their money and where it will end up and why it ends up that way. And their options. Here's option 1, right? We bought our time. I'm going to put option 2 down here. Option 2 is a great sale too. But it's from most of the time when things happen. This is 15 to 30 years. Okay, this guy's, what the hell was he last time? 62 years of age. He's probably not going to die until 85, 95 years of age by today's standards because he was pretty healthy. So on the 15th year, they paid into the home for 15 years. This is exactly how my sale was made last night. I presented them with this opportunity because they couldn't see it from 1 to 30 years. They couldn't see using $50,000 because that's all they could afford was 50 grand. That's it. That's all that was in the budget until I brought this in play. I said, Mr. Jones, you're probably going to live 15 more years. This is the era of time when it happens. Mrs. Jones needs it from the 15th to 30th year and exactly 50 grand from that point. So that's what helped me make my sale last night was that opportunity there. And it's 15 to 30 years. It's the halfway point. So that's option 2. Option 3 is obviously we want to pay off the home. Option 3 gets you big numbers, guys. You get huge numbers with this one. And you're paying off the whole house. But to do so, you have to show them what? What do you have to show this person? It's not just to pay the house off, right? Is that all it does? That's it. So I die, it just pays off the house. That's why I'm doing this, right? And for some people, they can get that. That might work, okay? But for many, many people across America, that isn't going to work. I'm just paying off my house. That's it. Okay, well, that's wonderful. I'm going to use my 401k instead. Unless I say, this thing grows huge amounts of value to both of you. Why does it bring value to both of you? Because when you're putting this, to get 200 grand on an age of that caliber, older ages, maybe you guys have younger demographics where it's not too bad on the wallet. So if you can pull $100, $200, $300, all the way up to $1,000 a month, as I do, you're going to have some big premiums, big paydays. What is this? This is average $1,000, $2,000, $3,000, $10,000 plus great residual over time. So what you want to do is you want to show the value and you want to show the living benefits. So if God forbid you get cancer, heart attack, or stroke, Mr. Jones, this money will pay off the house while you're alive or buy you time to do whatever you choose to. It doesn't really necessarily have to go towards a home, but it'll buy you time to make a decision whether you want to live here, maybe your health is too bad. It just gives you a lot of options, okay? So we have living benefits. We have the cash value, which is a huge selling point. The cash value portion of this is, I'm telling you right now, will bring a lot of value to the table when Mr. Jones finds out that it's not just for Mrs. Jones. He's always worth the cash value. She's always worth the face amount. So CVFA, cash value face amount. Mr. Jones, in 20 years, if Mrs. Jones passes, or when she passes away, I don't know what time it'll be, that if 20 years goes down the road, there's cash value of, you can do illustrations too and have the company send you an illustration right on the spot and show them what the actual cash values will be. But if you're guessing, you could just say, it's going to be $50,000 to $75,000. So you're saving money. The interest rate is about 4%. It has no cap, so that's good news. But you're going to have 50 to 75, maybe 100 grand in there in 20 years to help your retirement. So basically what I'm trying to do is I'm giving you a product that tries to get you most of your money back while you're renting $200,000. But in some sense, it's bringing value. So I'm living benefits. I got cash value. I got the face amount. So everybody's covered. There's not a point with this policy that somebody isn't protected in this house now. Everybody gets it. The kids get it. Their children would inherit this home, right? Would they stay here? Would they live here? No, they'd sell it and they'd split the equity. Well, what we need to do is make sure that they also have enough money to buy time too to sell the house. Now, God forbid it happened this month. That's the best return on investment, of course, because you only paid $500, $300, $200 a month, and they get a whopping 200 grand. But if it's later on down the line, each Mr. Jones, you'll always be worth the cash value. Mrs. Jones and the kids are always worth the 200,000. And if God forbid your health goes down the tubes, you're always worth a portion of that 200 grand too. So all bases were covered, guys. You can't lose. It's perfect. Works out great. Some of you asked me, about, I'm going to just tap on this because I was asked, using annuities for mortgage protection. I'm going to go over that in a different video. I did that last time. I just want to stick with the simplicity here. The simplest sale you can make to make a lot of money is just buying time. So the two options you should be rolling on as a new rep is buy time. Why do you want to buy time? Everybody know? Because of the equity, right? You want to buy time to sell the home. So we want to sell the house. Mrs. Jones, what question do you ask? Mrs. Jones, would you live here anymore if Mr. Jones was no longer here? If you ask that one simple question, it's going to give you the answer whether you're buying time or paying off the house. Remember that the option 2 was to make the premium less, because if you try to cover 30 years and it's outside their budget, let's go back and let's say somebody real quickly has $500 a month left over. Let's say they have less. They have between $300 and $500 a month, and you have to play this smart. If somebody tells you they got $100 a month out of that 500, if they have $500 a month left over, you should say, so you have on average about 300 to 500, maybe 750 left over a month. Is that correct? Out of these three, you come up with a number. You know they can afford 100 on all three of those. Now, what does it do to this? That makes that 200, that makes that 400, and that makes that 650. So now they can visually see what's all their bills are paid, and they actually still have money left. But you're also saying, listen, you're building cash value. It's not like it's disappearing. You're actually earning interest. This is the only money you're really earning interest on in this situation. They don't have anything else, right? So $100 here is going towards interest earned. So if, God forbid, Mrs. Jones, you were to pass away, Mr. Jones inherits this portion of it. But you and the kids always get the face amount. You and the children are always worth. And I brought more value by bringing the kids in. Now they're not just thinking about Mrs. Jones, they're thinking about the children, the grandchildren, and the inheritance. They want to screw over their family. They don't want to lose the equity. This is the biggest purchase they've made in their life, and for all of us, is usually the home, right? You got insurance on that car out there, that's worth 20 grand. This is $200,000. And that car depletes. This increases over time. You got to be nuts not to cover this, right? You got to cover it. You have to. They have to do it. They have to do it. Your job is to enforce the fact they have to do it. Every person you run into has to do it. Cash-owned people, meaning that they have $1 million put away. They got this stock market thing. It doesn't mean shit. They could lose half of it overnight. So you got 500 grand overnight, Mr. Jones. You lost 50% of it. Worst case scenario, guy, right? Maybe your stockbroker chooses something funky and it doesn't work out. You lose 50%, you die. You don't have enough time to get that other $500,000 away. Plus, you only left $50,000 for the next 8 to 9 years left behind. Yes, it'll pay off the house because you got a $300,000 mortgage. But why don't we do something that backs up? You got $1 million. Leave that alone. Take interest earned from that money and pay these premiums. So it's not out of pocket. So you see what I just did? I told Mr. Jones that this is free now. He's using interest earned from a stock-based product to make this puzzle all fit. And Mr. Jones, guess what? If Mrs. Jones passes away, you're just sitting on a bucket of money because it's earning cash value. You know, interesting thing too is if you get cancer, heart attack, or stroke, that money's yours while you're alive. And if you can't do two of six daily activities a day, they eating, dressing, toileting, transferring yourself around and drive. I even say driving cars because it's the visual, they can't drive a car anymore, that they receive that face amount while they're alive. This is huge value. It brings enormous value to the table, and it allows them to feel comfortable about this money. But this is something that I run into out there. I run into wealthy people in my demographics, and it's very difficult to work with them because they think that they own the world already. They're safe all the time. And maybe that's necessarily true, but this situation has happened. Mr. Jones, can you deny that this has happened to people out there? They believed and trusted in their stockbroker. I called a guy a couple months ago that had $250,000 put away. He was supposed to do an annuity with me. He calls a stockbroker. Stockbroker stole $12 million from people. They don't have their retirement anymore. This is going on in our world. So don't be fooled. Don't allow people to fool themselves because they are afraid of one word only, because they've been doing the same damn thing over and over for years. They are afraid of that word. They just met you. So if you don't sound good and look good and feel good to them, that word change isn't happening. And they are so used to doing the same damn thing, even in the worst times of their life, they won't change this program because nobody educated them on how. And what word do I bring to the table? I bring options through what? Education. I bring options through education. Education on what? Products. What the hell's going on out there? What I've seen in most homes happen. So once you've been doing it a while, you basically see everything, you hear everything. The objections aren't the real objections. Get over it, guys. You're going to have objections and you're going to have downtimes. But allow the numbers to work for you. With Foresters, you're able to bring value to the table, interest levels, cash value, living benefits, and you have a smart UL. It's what's called a smart UL. It's smart to use. Smart UL is the way to go these days, guys, without a doubt. It is another piece of the arsenal that we bring to the table for our reps to make larger premium sales through value and just wipe out the competition. So it's a great product to use. Use it on a weekly and daily basis. But remember, you're in business. What does a business do? A business provides services, products, things like that. That's your job. You provide a service through your education, and it didn't mean that damn test you took for the state. It has a lot more to do with these products. Look, this is what I ordered from Foresters. I mean, I got all kinds of stuff here from them. There's all kinds of funky stuff. You got your riders, you got your agent lapse, you got loan requests, midpoint assumptions, premium outlay. There's a lot of things in here that you really don't even need to know to sell this product. All of this is a wash, so I'm not even going to bring it to the table. Here's what you need to know, is that the premium is low, the face amount is high, the living benefits work, and the cash value is always there. Okay? You bring this to the table, I promise you, you will increase your sales opportunities out there, and you will help more people with this product. The living benefits are a very valuable thing to bring to the table, along with the cash value portion. I'm telling you right now that these people want to know where their money's going. They don't want to just really have people inheriting money that they don't have a piece of. Now, yes, they want to protect their family, 9 times out of 10. But they also would like to know that this brings some kind of value into their life while they're paying it. And that's why I sell. That's why I present and sell more than most people do, is because of the word value. And this product helps you bring a lot of value to the table. So I would suggest you call Foresters, you get all the living benefits out, you get understand the cash value a little bit, and you get the premium outlay. You can get the Foresters app right on your phone and you can adjust there. Now, I do have to inform you on something, that when you're using the Foresters app on your telephone and you're using the Smart UL, there are points in there that you have to understand. So call your upline, a smart upline. Don't call somebody that's not using the product, call somebody that is. So when you're doing the app and you're trying to get your numbers together, like the face amount versus premium, you're outlaying that non-smoker, things like that. And this number that they usually put in the premium isn't always the number that will come up on the illustration. But that's an easy fix because it's just an app and the illustration is different. So what I do is I just call Foresters and I just tell them right in front of the client what's going on. Now, if you have medications and things like that, I'm going to be honest with you, if people have like 6 medications out on the table, heart issues, things like that, you're probably not going to be able to get them into this, but you can fall back on Plan Right. Plan Right is secondary. This is great product also, aside from the Smart UL. This Plan Right is a small premium for a large face amount, and it brings benefits to the table for the kids and the people that live in there. They got Legal Link, they're charitable, they have the scholarships, they got free wills, so they can create wills for people. That's an awesome way to bring value to the table, is through designing wills with people and showing them that you really care. Deliver the policies. The Smart UL you'll be delivering, which allows you, provides you a situation for annuities. For those of you wanting to sell annuities through product, and our lead system, amongst the best in the industry, has the ability to demographically put you in front of people that have money and they don't know what the hell to do with it. So you need to get involved with this lead system regularly. There's not a person I know in our organization that orders leads on a regular basis that isn't feeding their family, isn't driving a nice car, doesn't live in a nice home. They have it all. Their dreams are fulfilled by these leads. And you'll understand more once you contact me. And I'm going to give you guys over there on that other webinar information live on Facebook, and here information on how to get a hold of these lead resources and then possibly join our organization for more valuable training every day. So we brought a lot of value. We got the premiums, we got the face amount, got your lead resources. You know, for those of you that